It's 2021. Welcome to the Real Money Show. The phone number 1-877-8-SILVER and the website guildhallwealth.com. We're going to be discussing things all hard assets, real money, money that's been money for thousands of years. As we're taping the show today on Friday, we are seeing weakness in the precious metals after seeing a good month and a little bit of continuous climbs. Obviously, a lot of political action happening, a lot of monetary movement behind the scenes. We're going to get into all of that today on the show. Remember, if you want to own physical precious metals, Guildhall is the place. You can do it online at guildhallpreciousmetals.com. You can acquire it direct from us and you can have it picked up or delivered. You can also store it at our independent vault facility that's IROC approved. And you can also have it in a registered account, your RSP, TFSA, RIF, LIF, etc. And this would be direct ownership of the precious metal, not pooled, no counterparty risk, not owned by someone else. This is direct ownership of the actual physical product. And really, that is a theme people should be considering for the year, which is zero counterparty risk. Jerry, how are you doing?
Very good. Happy New Year to everyone. I'm feeling great. How are you doing, Jeremy?
I'm doing well. We are seeing a lot of buying action on the dip today in the market. People very excited about getting in the market. And I think it's always confusing when you see the overall trend of the market is US dollar is going down. All currencies are being debased. Governments or central banks are printing money like absolute crazy. We thought it was crazy back in 2008. Now it's just on a whole other insane level. I think the word insane is probably going to be something we see a lot of throughout 2021. And here we are. Look, there's a pullback in the gold and silver market, but I didn't see premiums come down. Did you?
No, Jeremy, the premiums are still rather high. The demand and supply levels are at extremes, and us Guildhall members, brokers on the inside, we have to be very cognizant of this driver. This is a very strong fundamental, especially today when you have institutions and large investors acquiring as much as possible, trying to get their hands on the physical. Premiums, they don't look like they're tightening up anytime soon.
I want to address something right out the gate here as well, because we always get lumped in with cryptos, specifically Bitcoin. And obviously Bitcoin is going on an absolute tear. Congratulations for those who are involved in that. Yeah. But there's always this kind of, that it's either an either or situation. It's one or the, it's this or that. Yeah. And
it shouldn't be.
So we're fielding a lot of questions. We've been in this type of situation before where it certainly feels to me that people are chasing yield in that market. We're not seeing a ton of selling on the gold side. It's more about, I want to buy the dip here. I want to buy the dip. But how do you feel that plays into the psychology of the market?
The psychology regarding the reasons for why investors are looking for yield and opportunity. Number one, they're looking for yield, yes. Chasing yield can be very negligent. It can be very dangerous. You're lowering your guard and you're jumping into things headlong. And kudos. I mean, we hold crypto as well, but for different reasons. It's more like, it's a young industry. It's very young. We see the revolution with blockchain, so why not hold your lottery ticket into some Bitcoin? But zero counterparty risk is key. Bitcoin does rely on the electricity grid. It does rely on your keys and access to the accounts. This is counterparty risk, so it cannot be mixed and meddled with precious metals and gold, where you have zero counterparty risk with gold. But all of this, in terms of the psychology, people are fleeing fiat currencies. People are fleeing the financial system at a pace that we have never seen before.
That makes sense. I think that when you're looking at where are the similarities or where are the two trends coming together, the idea of the fleeing out of the fiat currency, the looking for safe haven. I think that gold, thousands of years worth of history. You understand that there's a limited amount of physical gold and that it is the insurance policy Personally, I view it as gold is the bridge. Most people are looking at cryptocurrencies who are staunch crypto supporters are really looking at the future of the next monetary system, the future of how money moves and what those values will look like as a result. But I think that gold is the bridge. Gold is the insurance policy. Once you have an insurance policy, right, you can do whatever you want. You have car insurance, drive like a speed demon, and it's up to you. And I really do see it as that. I know you agree that at Guildhall we believe it's not gold or nothing. It's not all or nothing. It is have your insurance policy, and we know that gold is negatively correlated to the dollar. So if the dollar is falling, and we can see that that trend has been in play for 2 decades plus. I mean, really, if you go back to 1913 is where it really started to debase, but definitely it started to speed up in the last few years.
Yeah, and it will likely continue, not to say the least, but with regards to the bridging between gold and Bitcoin, I don't believe, and this is my humble opinion, I would like to encourage people to get in touch with me to have this conversation a little bit more. But regarding, gold-backed cryptos, they usually argue that this could work because you can now spend your gold elsewhere. You can spend the gold here and there. Fundamentally and historically, gold was never for that purpose. Gold was never used as that purpose. It was always used as a store of value. You're not spending your insurance. You don't use that. You use other means and other forms of trade. Wealth insurance will always be gold, and you don't spend your gold, Jeremy.
Yeah, I have a little trouble with those gold-backed cryptos in that sense as well. It's again, we talk about the idea of cryptos being a bet on the future, and I see those as a bet on the concept that gold will one day be money again, but rather than holding a few coins in your purse, you would hold it in your account and use a credit card to spend your gold. But it's problematic for me personally, looking at the value of gold and silver today. Why would you spend something that's completely undervalued? And that's also something for me personally where I look at the difference between cryptos per se and precious metals is I can clearly understand where the value of gold and silver lie. In other words, I can tell you when it's reached a point where it's at a strong value. It's no longer undervalued. There are different things that you can look at, whether it's the gold Dow ratio, gold versus debt, how many ounces of gold to buy a house, how many ounces of silver to buy a house, how many ounces of gold to buy a car. You can look at thousands of years of history to understand what the value is. Actually, I was just starting to read The Art of War, and there was actually something talking about what it takes to run an army was 1,000 ounces of silver a week or something like that. And I was like, wow, it's still the measure, the static, it's that static measurement against everything. And that's why even when you look at currencies going down or the price of gold going up in a variety of currencies, the price isn't really rising in gold. It's that the currencies are falling and the value of gold is staying the same, but it is undervalued in the different currencies, and people are snapping it up. And I think we also have to discuss about the premiums, because the premiums is another case right now of the fact that if premiums are still really, really high, that is a clear indication that there is not enough product coming to market. We know that day to day.
Exactly. Example, this week I had to place an order into an RSP, and I had to place a rather big order in the RSP, and we were aiming for a particular brand. I believe it was Asahi, an LBMA approved brand, and literally after an hour and a half, that brand disappeared. The wholesaler took it off my list of approved bars for the RSP. So things are really changing, not week by week anymore. It's almost by the second. Things can really change in this market. So it's really exciting and worrying at the same time.
Yeah, I have another anecdote on that. We offer 10-ounce bars in the registered account, and I found over the last 3 weeks that they keep taking it off our system, and I have to email the main product manager at our wholesaler to get it enabled. And I emailed him and I said, it's embarrassing to email you if I need to fill out an order for an extra 5 10-ounce bars. What do you say? You just keep it up, and we're big boys. We can handle the management of our inventory. I thought I was being all smart, right? But no, he emailed me back. He said, listen, I can't leave it up because everyone will see it's up, and then I can't just leave it up there because everyone will think that it's available and it's not. So in effect, he was quietly saying, we're giving you guys a little VIP status here, and we're making sure that you're getting what you need. So we have to go through a couple extra hoops, but we do see that there's a lack of 10-ounce bars in the market. There's definitely a lack of gold maples in the market, silver maples, and it's just this like slow rollout of the physical market. In the next segment, let's talk about how that changes. How do you get to a point where premiums start to fall and you can start to see more product in the market and get that product availability? I think that that's a big difference. Again, if we're talking about quickly before break, why are we in this comparison all the time with cryptos? It's because there was an appropriation there. There was this idea that it's coins when it's not. It's ones and zeros. They used the idea of a gold coin, which it's not. They used the idea of mining, which it's not. It's equations. So there was a lot of appropriation there, and that kind of forced us into this comparison. But you have to really understand monetary history as well to really start to see why they're not comparable. But yet here we are in those type of conversations. Again, gold being the insurance policy, and you can't buy insurance after the fire. Into the next segment, we'll talk about some of the geopolitical unrest as well that's happening, and those are other good reasons to have insurance for your portfolio. Joining me today is Jerry Correia. He is a longtime associate with Guildhall, also our e-store manager, and FX background as well, which I think has really served you well in this market, Jerry, and helped educate more people about gold and silver, because they are actually considered money, and they do trade in the forex side of things. Isn't that right?
That's right. Just view it as a currency conversion.
So before the break, we were mentioning that we want to talk about the premiums, the geopolitical side of this market, and how that plays into what's going on in the precious metals. But let's start with the pullback. We've seen this kind of thing happen before. We saw it specifically happen in March. That really broke the market. The fact that silver dropped down to $12 an ounce. Gold, I think, dropped into the $1,500 range, maybe slightly lower. You couldn't buy it because the premiums jumped through the roof, and it really cracked the market open in terms of paper holders versus physical holders and the understanding of the actual physical demand. And that really started to pick up at that point. What do you make of the current pullback?
Huge buying opportunity right now. Gold is right now in the oversold state. We're looking at gold sitting at about 1840, relatively all on the back of data that came out today, which is actually Friday. Today was non-farm payrolls in the States, dismal figures, loss of about 140,000 jobs in the U.S., and that triggered things. Stocks are down. They're getting slammed right now. Gold as well hastens the retreat. We're down about 3%. Silver down about 7%. Gold is just retesting Fibonacci levels. So this is my currency background. I love the charts, and this is right now it's just resting at the 1840, 1850 mark, which is our buying zone. This is exactly where we love to be purchasing, and the Canadian dollar is actually faring pretty well as well, hovering around this 127 mark. So this is a really good buying opportunity, good buying day. And what we're seeing is it's dropping because U.S. Treasury yields are soaring. The 10-year Treasury yield is soaring above 1.07%, I believe. And this is signaling everyone's chasing yield. Banks are chasing yield. Again, this is a negligent move. We see that market is a debt market. That market is fiat. This is the real market we're dealing with. This is the opportunity to be buying the physical. So these are short-term machinations in the market, very short-term knee-jerk reactions, cool level head, always viewing medium to longer term. What is the goal? What is the focus? Everyone's rushing towards, look at the beginning of the year. We had a strong momentum to start the year, double push rallying risk appetite from the global markets into precious metals, into even raw commodities, platinum, palladium, doing amazing. And the steady resumption of the US dollar retreat. Again, I say this always, the stimulus, overprinting, and we're heading towards negative interest rates. If we see these stocks getting slammed and we head into a recession, they better have some room to cut. And the IMF shows that you need at least 6 points to cut during a recession. Where are we right now, Jeremy?
We're like almost zero. We're heading towards negative rates.
So this is the reason why, I mean, people are looking at gold as insurance. And I just want to bring up a quote from William F. Rickenbacker. He said, gold would have value if for no other reason than that it enables a citizen to fashion his financial escape from the state. And this is one of the reasons. Huge reason why we need to look at gold.
That's so interesting that you just brought up that quote, because one of the things that I keep seeing as the central banks are creating more money and just pumping the system, and also, you know, obviously Wall Street is leveraging those loans, right, into much more money. But you see this kind of power grab happening at the same time, right? So it's like, we're going to put money out there into the system. You, the citizen, aren't going to get it. You're lucky if you get $600 in the States. So, you know, where is the point between the truth and the lies? But you see a power grab. You definitely see a power grab on the part of non-elected officials. Now, if you don't believe that, please do your research, because I remember there was a lot of heated debate when Trump was going up against Jerome Powell of the Fed, and there were all these articles out, and the question was the independence of the Fed, right? I just used air quotes. I can't believe that. And still using air quotes. And here we are. We have Biden has been, you know, they did the electors, which was crazy, everything that was happening there. But he wants Janet Yellen to be the Treasury Secretary. Well, that doesn't scream independence from the Fed. What's also interesting about that, Jerry, if you go back to the Obama administration, when who was the Treasury Secretary then? I can't.
Yellen?
No. The Treasury Secretary in the States. Well, he didn't claim a lot of his stuff. Remember, he had to
Tim Geithner?
Yeah, Tim Geithner. Remember, he got in trouble because the guy who's going to be the Treasury Secretary didn't claim a whole bunch of money on his taxes. And it's happening again with Janet Yellen, right? She's gotten a whole bunch of speaking fees, millions of dollars from the banks on speaking fees, and yet she forgot to claim them on her taxes. Again, this is just goes to show about where is the real independence. These people are not really elected, yet they're in control of the money, which means they're in control of you. And so I thought that quote was quite timely.
And that line between truth and lie, I just want to bring up an article this week that I read, that we're on a highway to inflation, written by Michael Snyder, and he wrote, "The truth is that the U.S. does not have $900 billion to spend on a stimulus package. Instead, the government will have to borrow $900 billion that the Fed creates out of thin air." Where is the truth? Where is the reality? Where is the real money? They are paying today with tomorrow. Generational wealth, this is our focus. This is passing on generations something tangible, and gold is going to protect and grow your wealth for the long term.
I mean, that's the truth, right? If you want to talk about truth, if you look at an asset like gold and silver, gold specifically, bury it in the ground for thousands of years, pull it out of the ground, it's malleable, you just polish it up. It's exactly as it was from an atomical level. It's completely inert, right? So what a great asset to have. It is a truth teller, and just look at the gains in gold across a variety of currencies over the last 20 years, and it is telling a story. It is telling the truth. There is a de facto gold standard, and when people stop trusting government, when they stop trusting the banks, when they stop trusting the financial system, they take precautions, and that's what we're seeing a lot of people doing. I know we've kind of touched on the geopolitical stuff here, Jerry, but I just wanted to ask you, because I've noticed myself that a lot of people seem to be getting out of the housing market. And are you seeing that yourself?
Yeah.
And also that they're looking for places to park their money that feel safe. But there's a problem. You can't feel safe in the stock market, right? What are the chances it's going to double? Right? I mean, it's been running since 2009. What's the chances it's going to double from here is the question. I mean, what would it take for that to happen? Do you put your money into a crypto? I mean, remember what happened a couple years ago? Crypto got to 20,000. Everyone was like, oh my gosh, we're on our way. And then boom, it went down to, I think, a low of 6,000. So that's extreme volatility in the market. Gold has had one down year in the last 20 years, which shows that it's not a volatile metal. And so where do you put your money? If you leave it in the bank, are you insured on that money? Number one. Number two, what kind of gains are you going to get? I mean, we're getting close to negative interest. So there is a demand for precious metals in that sense, where people are saying, look, where do I park my money where it has the potential to move up 10, 15% in a year? And last year, gold went up about 22% in US dollars, 47%, 46% in US dollars for silver. Those are safe places to put funds.
It certainly is. I mean, going back to how we performed last year to this year, this is the beginning of a super cycle in precious metals, in our opinion. We look back at the 20-year cup and handle formation. This is a clear indication for all chartists and technical analysts who are interested in charts. Look at that cup and handle. It's a clear formation. Precious metals, yes, it offers the protection and the wealth insurance that we direly need right now today to safeguard your wealth, even just prepare overall. Precious metals will protect, physical precious metals will protect your wealth, but participate. We have tremendous topside potential in precious metals. Despite these little pullbacks in these markets, we have so much potential, and we look forward to the next, I think the peak will maybe in a year, 2 years. What are your thoughts on the peak?
The peak? I mean, we'll see how it plays out. Last year, read a great article that said it would happen within about 7 years, at least in the decade of the 20s, that we would probably see that peak. I agree with that. I think within the decade, we will see the massive moves in the market that everyone's been expecting, where, all of a sudden the calls for $10,000 gold could start to happen rapidly in the market. So I do see that as something that's occurring.
Well, now that the U.S. Senate has raised bets for extra large stimulus measures, it's obvious. We look back and we see, yes, prior to 2020 we had inflation, but now, writes Michael Snyder, we're entering a hyperinflationary phase. The U.S. is going to go down the same path that Venezuela, Zimbabwe, and the Weimar Republic went down. If this happens, that 7-year period, probably sooner than later.
Well, I think, and sometimes when the Venezuela topic comes up, I like to tell people that if you had gold in Venezuela, you don't live there anymore. That's right. Really, right?
Yeah.
The idea is for people who are listeners to the show, is the idea is to protect yourself, is to how to make sure you protect yourself, take advantage of the market. Speaking of taking advantage, Jerry, I see many, many people taking advantage. I would say that it's probably like a 90% people taking advantage and a 10%. I'm talking about the drop right now in the market, or the pullback recently. It's like 90% people wanting to take advantage and 10% people freaked out.
Yeah.
Right? Or 10% people saying, oh, I just can't take it anymore. And it's like, well, you're up 45% in the last few years. How, but what, that be that as it may, that's how it's always going to be. But so what we're seeing is people are trying to find different places to store wealth where they feel it's going to be safe. The metals have been a great place over the last couple decades at least, and that all the fundamentals are in place for this market to continue to move higher. Obviously, I think we're both on the same page that the pullback in the market is really more of an aberration. Premiums haven't gone down. We haven't seen a blast of physical product in the market. In fact, I just saw an SRS Roco report that something like like 20 million worth of maples got sold in January already. Let me just pull this up. 2.7 million silver eagles in the first week of 2021. 2.7 million ounces of silver in the first week alone.
When was the last time we saw silver eagles?
Yeah.
Such a long time.
Yeah.
We missed those.
Yeah. So, look, the idea is to protect. The idea is to take advantage of the pullbacks in the market, not be concerned about these pullbacks. They're short term. We have some great new quotes that you've brought. I want to hear some of your more quotes in the next segment. And also, we have to talk about that premium. How will that premium come down in the market? This is The Real Money Show, the number 18778 Silver, and the website guildhallwealth.com. We're talking about how to be financially successful through the year 2021. And we think we've got a pretty good idea for those who are longtime listeners to the show. You know what we're talking about. It's gold and silver, and also some natural fancy colored diamonds, which we hope to get to in a little bit on the show. But first, Jerry, we had such a good quote that you brought up in the last segment that I want to see what else you've brought to the show in terms of great quotes.
Quote by Ayn Rand. Whenever destroyers appear among men, they start by destroying money. For money is men's protection and the base of a moral existence. Destroyers seize gold and leave to its owners a counterfeit pile of paper. This kills all objective standards and delivers men into the arbitrary power of an arbitrary setter of values. Gold was an objective value, an equivalent of wealth produced. Paper is a mortgage on wealth that does not exist, backed by a gun aimed at those who are expected to produce it. Paper is a check drawn by legal looters upon an account which is not theirs, upon the virtue of the victims. Watch for the day when it bounces, marked account overdrawn. Powerful quote. I had to bring it to the table just because I'm reading more about the financial reset, universal basic income, debt reduction, and freedom. We are at a point, I think we're at that crossroads. We always would look forward and we're like, one day soon, this seems to be coming. This seems to be around the corner. But now our own Canadian government is talking about these realities. These are negative realities, and we have to, yes, be on the defensive, but on the offensive as well. And this is what gold brings.
Yeah, I was just thinking as you were talking about this, the idea that of objective standards. And when I have clients come to the office, or even if we're just starting to talk about gold as just a preliminary conversation, I'll often start with, what's the value of the dollar? And inevitably, 9 times out of 10, the person will say, oh, well, it's 1.29 against the US dollar, against whatever other currencies. And that in lies the point. The fact is that all of the currencies are untethered. And so it's literally 2 ships in the night on a cloudy evening, and they have no idea where they are except in relation to each other. That is not a good standard for understanding what the universal value of anything is, so that, for example, you and I could do a business deal across 2 different foreign nations and know that it's a fair deal. But if I'm doing a deal with you and you're devaluing your currency behind my back, then how is that a fair deal? Mm-hmm. That is the problem. That is why gold is such a good standard and has been such a good standard for thousands of years. This quote, I don't know when she wrote that, but that seems as timely today as when she wrote that. So amazing. What are your thoughts on it?
I just look at it from the bird's eye view, just from an overview, and this is the destruction of money. Your money is your key to control, your key to freedom, and your key to having maneuvers for your family or, for your life. Mm-hmm. This offers you liberty, and so the target is always on gold, is always on money. In order to control the masses, if that is their aim, they need to destroy the currency. And that has always been the case. We have fiat currencies, lifespan of up to 100 years. There needs to be a reset, and this is why the reset has been called by the World Economic Forum. These are big shots in Davos. They don't really have our interests in their hearts, in their minds. Therefore, we have to take control on the micro level, manage our wealth, manage and just be prepared overall.
The number 18778 silver and the website guildhallwealth.com. It's true, Jerry. I just saw a title for an article yesterday, saying that the 1% owned 5% back in 1990, and now they own 35% of assets and et cetera and wealth. Mm-hmm. That's a crazy number. I think as well, when we're talking about the idea of holding physical precious metals, the first goal is to maintain your wealth. In other words, you work hard for your money, whether you make $35,000 a year, whether you make $120,000 a year, whether you make $500,000 a year. The first thing is that whatever you made, you should continue to have the same purchasing power year over year. Right? You shouldn't have to earn an additional 10% or 8% or 6% every year just to keep up with inflation. That's, for me personally, is where gold is. You need it. That's where it's absolutely essential. And the idea that gold has averaged 11% a year for the last 20 years just shows you. And silver's done the same. It's been a more of a roller coaster ride, sure, because it's a smaller market, but it's still, at the end of the day, long term, fulfilled its promise, which is it beats inflation. So goal number one, if you are, whatever money you are earning for all of the value that you're putting out there into the world, you should be keeping that purchasing power. And gold and silver is that backup. They are doing that in spades. Then you can move into, well, how do I make money? Well, this is where, once you have your insurance policy, then you can look at other avenues as well. I mean, look, this is beat inflation plus. So having more of it in your portfolio could definitely be a service from now into the future.
And I want to just, shout out some people this week that actually got into the market. One in particular, the guard is up. People are worried about something, which is the reason why you look at gold. So we understand that. We understand here at Guildhall that there is something on your plate that you just don't like, that you're contacting us, and you need to know that we are brick and mortar, that you can meet someone. But unfortunately, with all the restrictions, we can't meet with you and sit with you right now. So I had a Zoom chat with the gent. Took him on a tour of the office. Here's my office. Here's my TV. Here are the charts. Lowered the guard. He was, a little hesitant at first, but he's like, Jerry, I want to put in X amount, a little bit over what he wanted to do. So I just wanted to, acknowledge this gentleman and thank him for his trust, his support, and we look forward to helping you and many others. This is something that we at Guildhall pride ourselves in, is lowering that guard and raising your expectations. We want to beat your expectations here at Guildhall. So get in touch and let's have a Zoom chat.
Jerry, you were just mentioning that you did a Zoom call with a client, and also, look, people are making a change, especially at this time of year, and if they're new to Guildhall, they're doing their due diligence. Let's help them with that. What are some things that they can look at to know that, hey, we are a good company to be working with?
Check out our reviews. I think number one, this is what I do personally when I look into moving or doing something with my money. I look at reviews, see how well they're doing, what they do. Are they real? Let's check them out. Let's do our due diligence. And I believe that we've been around since 2002. Offering the radio show since the early 2008, 2007, and which we love. The presentations, the education, transparency builds trust is one of our philosophies. And I think as long as we keep that as the bedrock for Guildhall, we are expanding, we're growing fast. The calls are just, off the hook right now. As we're recording, the phones just not stop ringing. But this is the way I see it, and I think this, as long as we keep that as our philosophy, good times ahead.
Yeah, I agree. Look, we've got lots of user reviews on Trustpilot. We're a member of the Better Business Bureau. We've been in business since 2002. We've been working with Questrade since 2014, 15. So it's been over 5 years working with them for the registered accounts, partnered with them. And, of course, we've been on the radio here since 2008. So, look, it was a magnificent year last year. Anyone who's been in the market over the last 5 years is looking at, especially in silver, but also in gold, close to 50% gains over the last few years, which I think is more than expected. I think the the better times are still to come.
Again, the still to come. You brought up a great point earlier. A lot of investors, a lot of traders even look at the silver to gold ratio, and right now silver to gold ratio is hovering around 73 to 1, indicating silver is a buy. You need 73 ounces of silver to get an ounce of gold. This is the time to acquire. Where are we going to be going? We're going to be going back to 1980, where you just needed 2,000 ounces of silver to buy yourself a house. We want financial freedom. We want property. We want assets, real assets that you own, and either pay off your mortgage with your silver or buy a house.
I totally agree. This is the moment in time where your purchasing power can grow exponentially. And speaking of that, Jerry, you mentioned the gold ratio, the silver gold ratio, and the idea that it's way too high right now. The historical average, excuse me, was about 16 to 1. Most analysts in this market could see it coming down to that or even further. I mean, we don't have to be greedy. If it came down to 20 to 1, I'd be super happy. 30 to 1. In 2011, it got down to 35 to 1. But that does play into this idea of the premium, something that we've been wanting to discuss today. And the idea is right now, look, the premiums on the metals are super high. They doubled back in March and have not come down since. So what does that tell you? What that tells you is that there's a discrepancy between the paper price that you're seeing, which has gone down in the last day or two, and the actual cost to get it physically in your hand. Now, what is going to make that reconcile? And what you're going to need is prices to double in the market. Case in point, right now, 1,000 ounces of silver will probably cost you like $35,000. Well, if the price of silver were to double, then you can only buy half as much. You'll only be able to buy 500 ounces. Now, the concept here is that we can only bring the market can only bring so much supply into the market on a day-to-day, month-to-month, year-to-year. It's not like you're going to ramp up a mine and all of a sudden double the production of silver. It's just not going to happen. You might add, if they really work at it, you might add an extra 10, 15%. I mean, that would be mind-boggling to add that much more supply to the market. So it's not going to be the mining side of the market that brings in the supply. What it's going to be is a higher price, which means people are buying that much less. And that's what's going to take the pressure off the market. As well, once that price has moved up significantly higher, then people will be adjusting their portfolios and selling. And so that might bring some more product back into the market. But in the meantime, if you look at Green New Deal and trying to come up with, trying to get off coal and et cetera, fossil fuels, the demand on silver for electric cars, the demand on silver for solar power, not to mention that it is naturally absorbs bacteria. So if you want to talk about water filtration, right? It's just so unique in its characteristics, and it's just essential for our modern day living. If you have switched on a light switch today, you have touched silver. It's that integral to our day-to-day life. And so personally for me, I think that the high premiums get reconciled with much higher prices. Obviously, much higher prices means the ratio comes down.
And further to that point regarding the mining sector, if we do see the full onslaught with the Green New Deal and cutting the carbon, you can't ramp up mining. You'll have to actually slow the mining down because it's a pretty dirty job to be mining deep into the earth.
I didn't think about that. In other words, along with Green New Deal type of movement forward, there would be legislations to make things more green. And therefore, it makes the mining industry even tougher to pull it out of the ground.
Unless they give them credits or something like that to offset. But
wow, that's something to consider. Let's wrap up the show. We've talked a lot. We've covered a lot of ground today. We've had some great quotes, which I think people should go to YouTube and re-listen to the show and listen to some of those quotes. We have a pullback in the market, which is only bringing in more buyers at this point. We see premiums in the market are very high.
Huge premiums, not going down, but huge. As a result, we're seeing people wanting to take advantage of the prices and geopolitical concerns as well, causing more and more demand coming into the market. premiums are not going to be going down anytime soon. So we want to keep an eye on what's going on in the political sector, geopolitical sector, a lot of positioning globally, but we have to remain focused, not look too much on the micro. Let's look at the bigger, the medium to longer term picture, set our goals towards more acquisition, more ownership, because that equals your freedom.
That is hard assets in a nutshell. It's about accumulating assets. Gold and silver are the longest standing in history that protect your wealth and can grow your wealth. We want to remember the truth versus the lies in the market, and gold tells the truth. Consider having some in your portfolio. Get out of the paper market. Make sure that you have negatively correlated assets to the dollar. Precious metals are negatively correlated to the currencies. Consider accumulating more on the dips. That's a very good sign. We like seeing markets that pull back from time to time. So that's it for the show this week. We got a lot more coming throughout the year. The news is just flooding in, and so it's going to be a very exciting year in the precious metals market. We're just getting started. If you want to get started with your own portfolio, give us a call at 1-877-8-SILVER, the website guildhallwealth.com.